What? Come on. There we go. Good morning. My name is Mark Grossman, and before I begin, I want to explain something very clearly. I am reading from prepared notes this morning, because if I speak freely on this topic, it turns into a 3-hour conversation very quickly, and that is not the purpose of this briefing. The purpose of this briefing is simple: to explain in operational terms why so many insurance claims become delayed, disputed, emotional, financially damaging, and unnecessary adversarial, even when many of the people involved are actually trying to do the right thing. This is not a political presentation. This is not an attack on carriers. This is not an attack on contractors. This is not an emotional victim presentation. And this is not a viral performance. This is a technical briefing about process failure. For the past 7 months, I have publicly documented reoccurring operational issues affecting homeowners, carriers, contractors, regulators, mitigation companies, and lenders. And the recurring pattern is this: everyone involved in a claim is looking at a different piece of the process, but the estimate all connects it. The estimate determines scope, sequencing, pricing, documentation, repair direction, cycle time, supplements, collections exposure, and ultimately whether the process moves cleanly or collapses in conflict. This is the actual problem. And most people only see one side of the system, and that's where the friction compounds. The homeowner sees stress, the contractor sees incomplete scope, the adjuster sees estimate control and documentation, the carrier sees financial exposure and cycle time, the regulator sees complaints after the breakdown has already occurred, and the bank sees collateral impairment. But the estimate is the bridge that ties all those parties together. And when that bridge is built incorrectly, the consequences spread across the entire process. Most homeowners have never handled a claim before, and they trust whoever arrives. They sign documents during emergencies. However, they do not understand mitigation invoices, scope sheets, assignment language, trade sequencing, or how one estimate can impact the entire claim moving forward. By the time they realize something is wrong, the claim is already moving, the contractor is already involved, or collections activity has already started. Most homeowners are not making bad decisions. They are making uninformed decisions during emergencies. And right now, as I'm conducting this live briefing, there are homeowners being pursued through collections over mitigation invoices they never fully understood in the first place. Not because every contractor is malicious, not because not because carriers are refusing to pay, but because of unsupported billing, poor documentation, incomplete scope, and fragmented operational systems are trapping homeowners in the middle. I recently reviewed a file involving a homeowner being pursued for tens of thousands of dollars after the mitigation billing dispute between the contractor and the carrier. The homeowner became the collateral damage in the middle of the process, and they didn't understand. That's why everyone should be concerned: the regulators, the banks, the carriers, and the contractors. Because the longer these operational failures continue, the more homeowners end up suffering downstream consequences of a system they were never trained to navigate, nor should they have to. And this is where the estimate becomes critical, because incomplete and poorly structured estimates increase supplements, cycle time, ALE exposure, reinspection costs, litigation risk, financial stress, and distrust across the entire process. Many claims disputes are not simply caused by refusal to pay. They are caused by inaccurate or incomplete starting estimates that create the friction downstream. Accuracy moves claims, friction stalls them. And the same applies to the regulators. Most complaints arrive after the operational breakdown has already happened. But by then, the homeowner is emotional, the contractor is frustrated, the carrier is defending prior scope, and everyone is arguing from different versions of the claim. This is why emotional outrage alone does not fix documentation failure. The system requires operational clarity, better estimating, better sequencing, better documentation, better homeowner understanding before commitments are actually made. This is also a lender issue. Mortgage collateral depends on proper restoration. Improperly scoped repairs, unresolved damage, delayed restoration, and claim friction all affect long-term collateral stability. This is not simply an insurance issue. This is a collateral integrity issue. And the reason why I can explain this differently is because I've seen the process from multiple sides, as construction, estimating, project management, public adjusting, carrier review, financial exposure with my Series 7 and 63, trade sequencing. That combination, yeah, it's uncommon. It has allowed me to identify reoccurring patterns that can actually be simplified and explained in operational terms. And that is why I built ClaimHelpMe.com, not to attack the industry, not to become famous. Honestly, I dislike being online, and I actually hate making these videos. But I keep walking into homes where people are financially devastated because they were told to make decisions they did not fully understand. Eventually, the patterns became impossible to ignore, so the purpose of this site became very simple. Organize the operational failures, simplify them, explain them, and reduce the friction before it compounds. Because the system does not need destruction, it needs alignment. Better baseline estimating, better sequencing, better homeowner education, better documentation, better accountability, better operational clarity from the beginning. And when that happens, homeowners benefit, carriers benefit, contractors benefit, regulators benefit, and lenders benefit. This isn't anti-industry, it's pro-function. The material is now public. The 330-page sitemap has already been indexed in its first 6 weeks. The examples are documented, the logic is reviewable, and the purpose of this briefing is not to create outrage. It is to document a fixable operational problem affecting millions of homeowners and every institution connected to the claim process. Now let's discuss collections issue, because this proves the problem is not limited to carriers, because it heavily, let me say that again, it heavily exists in the private sector. I recently reviewed a mitigation file, which was approximately $29,000 was billed. The carrier roughly paid $10,000. And based on actual structure of the invoice, the reasonable number likely should have been around $12,000 to $13,000 if it was written correctly and supported properly. But this is where homeowners get trapped. The homeowner does not understand mitigation billing, line item inflation, unsupported charges, overhead and profit, or what portions of the invoice that they can likely dispute. In this case, roughly $6,000 of the invoice involved overhead and profit structure alone. And years later, the homeowner was suddenly pursued through collections for the remaining balance. Not because they didn't understand the dispute, not because they knowingly accepted the risk, but because they signed documents during an emergency and trusted the system around them. This is a real world pain. This is what happens, operational failure creates. The homeowner was never contacted after the mitigation by the contractor, but just the collection agency. And when he legitimately questioned it, he was told by the mitigation company to deal with your collection agency. Now, how does a homeowner who trusted the mitigation company that came in with smiles and now have a credit bill issue with a full inflated stack, double dip charges? Just alone, O&P, $6,000. He doesn't know that O&P is not supposed to be charged on mitigation, but yet he's being made accountable for it. And that is the very point of why I don't stop. To the leaders I'm speaking to, this is the reality of what has veered off the rails due to poor structure when the answer is right here, but it's being met with silence. Let's remember one last thing, how these contracts are signed. With a direction to pay during an emergency. They are done under duress, and they are listening to an expert, and they don't have time to read through one of these contracts, and this is the actual result of it. So let's talk about that disconnect between the contractor who is actually explaining this to a homeowner to sign and their main office, because the person in the field, do you know what they tell them? We work for the proceeds. Little do they know that there's one sentence in there that says they can come after you for the difference. And guess what happens when the back office sees that it wasn't paid? They do exactly this. So people who are actually explaining things to homeowners, if you ask any of them, they've never read their actual contract. They're asking people to sign things they don't even know what they're asking them to sign. I've had to actually force my guys to do it when they're giving something to sign because they should know in case it's questioned. And if you actually tell a homeowner where this is, guess what happens? A line gets put through it, 2 initials get put on top of it. But that rarely happens. I would cross it off of mine and I would just sign it so the homeowner didn't even have to deal with this. And this is not an isolated issue. This is the same pattern that repeats across the country. Inflated or unsupported mitigation billing, poorly documented estimates, duplicated scope, improper category escalation, freshwater losses treated like hazardous conditions, room duplication, sequencing breakdowns, and homeowners caught in the middle after the fact. That's where the friction begins. And once that friction begins, everything downstream becomes more expensive. Cycle time increases, ALE increases, supplements increases, litigation risk increases, distrust increases, and everyone starts blaming each other. Sound familiar? Now let's discuss the lender side for a moment. The 90-minute approval case matters because it demonstrates something that's very important. When trade sequencing and estimating are performed correctly from the beginning, enormous amount of friction just plain disappeared. A 6-month stalemate moved in under 2 hours once the estimate reflected an actual construction sequencing and proper documented scope. Now that matters to banks, carriers, regulators, contractors, and homeowners. Because of the financial cost of friction across the system is enormous, this carrier was offering $168,000 for a totally gutted home, but when the estimate was done right, it came to $423,000 repair and another $130,000 in contents removal and mitigation. You can read this in the case study. There's plenty others more up there as well. Now, that's a massive reduction in collateral value, and banks, you should be very concerned about that. Now, let's touch upon another issue, out-of-state accountability gaps. Yeah, this is a big one. One of the reoccurring operational concerns I continue to see involves technical claim decisions being made by individuals operating outside meaningful state accountability structure. And the reality is this: when a homeowner attempts to challenge those decisions, accountability becomes fragmented because of the licensing, compliant jurisdiction, and operational authority often exist in different places. That creates a system where the homeowner struggles to understand who made the decision, who oversees the decision, and where do the actual accountability, where does it exist? Again, this is not an emotional argument, it's an operational one. And this is why I continue repeating the same point. Emotion alone does not fix documentation failure. Empathy alone does not fix sequencing failure. Outrage alone does not fix estimate failure. Operational clarity fixes it. That is why this site exists. This site is free to access. Let me say that again. It's free. The operational explanations are public. The guides themselves condense years of field experience into practical homeowner education designed to reduce friction before the process breaks down. And honestly, most of this is not complicated once it's explained correctly. Insurance has simply become operationally fragmented and difficult for the average homeowner to navigate during moments of stress. But the underlying logic itself is explainable. That is why the material was built, not to create conflict, not to attack the system, but to reduce the unnecessary friction damaging homeowners, contractors, carriers, lenders, and regulators at the same time. So let me end with this. This briefing is now part of public record. The material is indexed. The examples are documented. The operational framework is reviewable. And the purpose of this was never outrage. The purpose was to document a fixable operational problem and publicly organize a framework that can reduce friction across the entire claim process. And what I want to explain this in one final note before I close. The reason why I can simplify these things the way I do is because I'm not speaking about the system from behind a desk. I have physically worked across the process from catastrophic fires to mitigation and sewage cleanup to construction trades, senior estimating, senior project managing, and standing in front with the homeowners while they watch everything they own burn or become unlivable. I have also worked through operational side, trade sequencing, claim review, scope review, carrier estimate review, financial exposure, HOA complexity, and the downstream friction that develops when the process breaks down. That matters because most people involved in claims only see one section of the system. The contractor sees construction, the adjuster sees estimate control, the regulator sees complaints, the lender sees collateral, and the homeowner, they see stress. But when you have physically operated across all those layers, the patterns become much easier to identify and much easier to explain. And that is the entire point of this, not to complicate the system, to remove unnecessary complexity from it. Because once the process is explained correctly, most of the issues are actually understandable and it's fixable. That is why this comes naturally to me. Not because the system is simple, but because I've spent years physically working inside the moving parts that create the friction in the first place. And from your perspective, whether you're a regulator, carrier, contractor, lender, or homeowner, that should matter. Because the goal here is not disruption. The goal here is operational alignment so the process can function the way it was originally intended to function. And one final point. Part of the reason why I choose to do this publicly and live is because operational problems of this scale should not exist in private conversations, closed complaints, or isolated claim files. The purpose of putting this on the public record is not outrage. It is documentation. So there is now a clear, reviewable explanation connecting to estimate structure, claim friction, homeowner confusion, collection exposure, mitigation billing, collateral concerns, cycle time, and operational failure across the system itself. That matters because the framework is publicly explained and documented clearly. The conversation can finally move away from emotional blame and toward operational reform. So let's just end this with the final few notes. Scott White and Michael Conway. If you want to know what actually is breaking down, the invitation is open to the regulators. Feel free to reach out. I can prove this over and over again. Hell, just send me a redacted estimate and I'll tell you exactly what's missing on the phone call. Senator Hawley, if your staff wants to understand why these property delays are really happening without any veils, reach out. This is actually an easy one to explain, and I think I could do it in 10 minutes. And you may be surprised, it's not always the carrier. To the risk officers, JP Morgan Chase and Wells Fargo, as well as others, if you want to see exactly how your underlying collateral is severely undervalued, have your assets teams reach out to me and I'll show you where the poor scoping has caused immediate on a $255,000 valuation reduction. So this one's important. Verisk, Xactimate. I have no affiliation with anyone at that company, but I do want to say one thing. I used the software for decades. It is the most outstanding program. It is so detailed that I have to actually lower my estimates on remodeling jobs, not insurance, but remodeling jobs. And this is in no way a software problem. It is an end user problem, which is actually easy to prove. Carriers, I know the accountability gap is one that's going to jump out, and which is reasonable because states actually need insurance carriers, and I can only assume that is why they allow it, and I get it. But if I can train a 21-year-old young lady with no construction background to write better than a 30-year-old veteran in 3 months, you may just want to go that route because a third, if not half my claims I deal with are accountability gap. Everyone, thank you for your time and enjoy the rest of your day. ClaimHelpMe.com.